The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the April 22nd, the magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I can make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to pick up that phone, dial on it at 877-927-6648. If you've got a question but you can't call in, you can send me an email. Send that off to Steve at TFNN.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we got a little bit of a mixed bag right now. You got the NASDAQ 100 that has just flipped to negative. It's down about 6 points. The other U.S. indices that we track are trading the upside. Dow's up 37, S&P 7, Russell's up 5, semis are up 8, trannies up 60, New York Stock Exchange up 53, gold's off $62, silver's off $1.44, light sweet crude off 50 cents, natural gas is up a nickel, 30-year Treasury is printed out at 114.14. That's off about 6 ticks. If we take a look at the leaders in the clubhouse, MicroStrategy, a $72 move, 6%. NVIDIA, $12 move, 1 6/10. Lululemon, $9, 2 6/10. Icon PLC, 2.5%, or about $7. Azimuth Holdings up $6, a little less than 1% to the upside. To the downside, we've got Super Micro off $13, nearly 2%. Lam Research, $10, 1%. Madrigal Pharmaceuticals, $9, 4%. Inspire Medical, $8, nearly 4%. HubSpot is down 8. That's about 1 3/10% to the downside. So we got movers and we've got shakers. Let's begin our day with just take a look at current status of the market from an overbought or oversold standpoint. You can see that New York Stock Exchange, the Advanced Client Oscillator, that is panel number 3. It's the one that says Advanced Client Oscillator on it inside the window. You can see that is now well above its minus 150 level. So it's out of the oversold territory. That does not mean that the bulls have control here. No, it does not mean that at all. And as long as price remains below that zero threshold level, it's telling us that sellers are the ones that have the power or the energy. If we take a look at spot volatilities out here, we'll just simply expand this out. I had mentioned that price is targeted, has tested its parabolic SAR down at 1777, the low of the day, 1777. Odds favor close below 1777, not just touching it, which might be slightly different than the way that Garo teaches us or uses it. But I would say a close below 1777 would suggest to you and I that we should see the spot volatility continue to move lower, and therefore we should see a rally inside the S&P 500. But it hasn't done that just yet. So that's what's going on with regard to market conditions. Let's go take a look at the time frame that I believe is the best time frame, at least today, with regard to trying to generate and understand what the markets are communicating to us. So to do that, we're going to go take a look at my white background screens. If you give me a moment, we'll switch over there. Change windows. Okay, so here we're taking a look at the 60-minute time frame. Now, I'll start with the ES Mini so we can take a look at it. When we take a look at the ES Mini, you can see that this formed a nice TD9 count bottom on a 60-minute hourly chart back at $2,300. That was back on April 18th. Led right to a nice rally that formed a TD9 count top. That was at 10 o'clock in the morning on April 19th. and then price moves lower. Now, I can't share with you why it stopped where it did. I'm not going to do that analysis. But what I am going to share with you is that we've got another TD9 count top. That TD9 count top confirmed at 9 a.m. It completed at 10 a.m. And right now we have price below its breakout level at 5015.25 out there. Closed below that at 11 a.m. That suggests we have lower price coming at us. Now, price is trading right now into a swing point from back at 4 o'clock in the afternoon. That was back on the 19th. And that swing point ranges anywhere between 5,975 or that's at the high, at the low, 49.91.25. As long as price remains inside there, it suggests at least a test of that area. Now, you could actually set up an A to B equals CD pattern to the downside if price is able to close below that swing low. And again, that number out there is at the 49.91 We can draw that pattern in. This does not mean that this pattern is actually going to take hold, but it is a potential pattern out there. And since price is trading into that swing point, and because the ES mini has what did not find support at its breakout level, this becomes the next potential pattern that is out there. I can't seem to, what the heck is going on with this thing? Wow. So I'll try this just this way. I'm just going to grab it if I can. That's been the problem here, is it won't let me grab this thing. Wow. Okay, so let me try resetting this mouse and this keyboard. Maybe if I do that, maybe that will help me out. Let me just try grabbing this. No, sorry about that, folks. A technical difficulty. That's really technical. Wow. Okay, so I'm going to try to do it this way. Just simply draw in another approximate line out there. Get pretty close to it. See if I can grab that one. I cannot. Son of a gun. Okay. Well, each of you could, if you pull up your 60-minute time frame charts, you could put in that potential A to B equals CD to the downside. But more likely than not, it would take us down to those lows from $2,300 back on April 18th out there, and that is a bullish hammer candle. Now, that's the ES mini, and it is the Dow equity future contracts that are providing us with the signals, and those signals being those TD9 counts. Now, in the case of the Dow equity future contract, what this formed was also a Rhodes momentum indicator top out there. We can see with the YM on its hourly time frame, price is now below both its breakout level and the bottom of its profile out there. So that sets up. Now here, I don't see an A to B equals CD pattern to the downside. In fact, the only thing that I see from a 30 or 60-minute time frame for the Dow is all the way down to 37,684 out there. So we'd have to look at the Dow's other time frames, multi-time frames out there to try to get a feel. Now, with regard to the NQ, we can see the NQ didn't really rally much like the and never was able to even take out profile resistance. So not that the NQ is not providing us with the signals, but the best charting signal so far that I've been able to identify, at least up till this point in time, has been the 60-minute ES and the 60-minute Dow equity future contract. You got a nice TD9 count bottom, Rhodes momentum indicator bottom on the Russell for its 60-minute time frame. And prices, been dealing with that breakdown level at 1972. It's closed above it for a bar, but has, that's really the struggle area for the Russell 2000, that 1972 level out there. So that's what's going on from an intraday perspective out there. If we take a quick peek at the daily time frames, the daily time frame right now, give me a moment here to pull those up. Daily time frame for the equity future contracts. Oh, that's a daily and weekly. Not that that's a bad thing. But let's do this, folks. We're about to go to a breakout here. I'll get my charts all together, and when we come back, we'll take a look at these things. We're going to look at, so we'll look at the NQ for YOY. We'll take a look at DVA for Mr. Bill and McDonald's for Phil. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we got the daily equity future contracts up on our screen. If we take a look at the lower left out there, you've got that Dow equity future contract that had confirmed a TD9 count bottom pattern. It did that on April the 15th out there. We can see that low of that pattern has been tested several times. It has held each time. We do have a new profile that is in place out here. That profile's got support at 37,651 and resists up at 38,780. What we can notice here is so far today, price was able to get up to that red oscillator and change line and turn back down. And that's not a bullish signal at all out here. But we still have a bottom that is in place. That bottom would get negated with a close below the bar after bar number 9, and that would be down at the 37,911 area out there. So if price closes below that, then we're going to likely go target at least profile support at 37,651. If we take a look at the Russell 2000, the Russell 2000 will form a TD9 count bottom pattern today, so long as price closes below 1982.80 at day's end. Now, it is also attempting to form a new profile. Its resistance level is 2,450. So if it does form this bottom, wouldn't be surprised to see that level get tested and potentially for that level to hold out there. We take a look at the ES and the NQ. At this moment in time, they've got A to B equals CD patterns to the downside. I've got that number 13 that shows up on my screen. That is a automated tool that tries to calculate or does calculate the TD sequential counts out there. There was a question inside the den by YOY. Could I expand the details regarding the sequential count? The best way to do that is to really go out and get Tom DeMark's book out here. This is one of the books. There's several of them. You can find them on Amazon out here. You don't have to just get the first edition of this book, but New Market Timing, and that's what I would really recommend. It's a complicated system out there. The TD9 is much easier. That's the setup process. That's the beginning of those TD sequential counts out there. But when you do get a signal, if you get a close above the bar 4 bars earlier. So each day you're measuring that YOY. You're take a look at where did this bar close compared to the bar 4 bars earlier. And on a TD sequential bottom, that requires a close above that bar out there. And that would be the same thing with regard to the NQ. So they're both also in that A to B equals CD pattern on the downside. A bullish reversal candle would go ahead and confirm a bottom. So we've got 2 of the 4 that are signaling potential some type of potential bottom. But I offer caution at this stage. And the reason I offer caution, we took a look at that oversold New York Stock Exchange advanced decline oscillator and still below zero. And the spot VIX is still above the 50-day exponential moving average. Those are the reasons to be very cautious out there. So why I hope that helped to answer your question, but go get that book. Spend some time reading it out there. It is it's got a complicated set of tools, but they are good tools and they are worth learning for sure. Let's go to our first question out here. I really only have 2 questions, so would love to hear from you folks. You can send me an email, steve@tfnn.com or inside the Tiger's Den. You folks can fire away. The first one we're going to take a look at is DBA. Now, DBA is an ETF for a group of commodities. In fact, can we see what is in DBA right now? Let me see here. Just do a quick internet search, DBA, because gold, I'm sure metals are in there. I just don't know from a weighting standpoint. Where is the DBO? It says an agriculture fund, but so cocoa. Cocoa. So here we go. So let's take this out here. Let's do this because cocoa's just simply been on a tear. I mean, an absolute tear. So these are the holdings. Doesn't tell me which date, does it? No. But if we take a look at the holdings, I'm assuming this is correct. I always like to see the date on there. I'm not going to go ahead and download this right now. But this shows us that the holdings inside here, you've got cocoa with a 28% weighting, coffee 12%, live cattle 10%, soybeans 9%, corn 9%. Oh, so there is no gold and there is no metals in here. So those are the weightings. Now, Mr. Bill wants to take a look at it. So let's go take a look at it. He also wanted to see what the seasonal pattern was. Oh, so the seasonal pattern, where do I have that? Okay, let me close that out. I do have the seasonal pattern. If you give me a moment, I had it up and then it disappeared. Whoa, it really disappeared. So I've got to pull that up again. Give me a moment here, if you would, Mr. Bill, and I'll get those seasonal charts. We're taking a look at the DBA charts. That's what you see up on our screen. On the weekly time frame, you do not see any kind of a topping pattern out here at all. And we're in bar number 6, so you can see it's just been a rocket ship. It negated its TD9 count on the weekly time frame. The monthly time frame doesn't have any kind of a topping pattern or anything. It's got a Rhodes momentum indicator signal, but that's just a warning sign if you were to see a bearish reversal candle, and we certainly don't have that as we speak. And on the daily time frame out here, if we take a look at DBA, boy, you can see the influence of cocoa inside of this. No topping signal here, and you're trading above profiles and everything. Oh, geez, I pulled up the wrong thing. What the heck? Stevie, come on, seasonings. There we go. So give me a moment here, Mr. Bill, and I will pull up that seasonal chart for you. We'll start taking a look at it. Sorry about that, folks. Sometimes that's the way the cookie crumbles. DBA, and we got DBA, and now we're ready, set, go. So now let's pull up the DBA contract out here, Mr. Bill. We take a look at it. Let's get the correct data, or the maximum data that I've got, 17 worth of data. Let's go ahead and put today's date in here. And then let's just simply, so you can see that we're in a favorable time period. The favorable time period basically begins, the real favorable time period begins right around the end of March and really lasts through the middle of June out there. So that's the favorable seasonal cycle out here. We can see once we get towards the middle of June, DBA typically starts to move quite a bit lower out there. So those are the seasonals. So now when we take a look at DBA, what is it that you need to watch out for? And at this stage here, certainly there is an A to B equals CD pattern to the upside. So there's a few of them in here. But if we take the most conservative one, what you'd be watching for is a bearish reversal candle. And a bearish reversal candle would complete both at this stage here, a sell the D point pattern and a Rhodes momentum indicator top. Otherwise, looks like this wants to continue to move higher. If we take a look at the daily Texas two-step pattern out here. You're only in bar number 4 to the upside. You can see the last time we got to bar number 4, that was on trading day, March 24th. When I say bar number 4, folks, what I'm saying here is 4 consecutive closes to the upside. Then you had one move to the downside. It was a one-day wonder out there. So maybe what this is telling us is to expect or anticipate that tomorrow would be a down day inside of the DBA. So, Mr. Bill, sorry about fumbling all that, but hopefully that gave the information that you were looking for. If not, you'll be kind enough to let me know. Let's go take a look at our next request, which was to take a look at McDonald's. Mickey D's for Phil inside the Tiger's Den. Now, in the case of McDonald's out here, Phil, I know you're asking, will this fill the gaps out here? So when I take a look at my daily time frame chart for gaps, I don't see any. Let's see. So, I mean, this gap out here was already full. I don't see any gap. The only gap that I've got is all the way up here from March the 13th, and the high of that is at 293.47. So I don't know the answer to that question, but what I can share with you is I can share with it on a daily time frame. McDonald's formed a Rhodes Momentum Indicator bottom pattern on April the 17th. And then and price continued to move higher, so that's a beautiful thing. And today it's moving higher even further. Now, it is traded above the top of its daily profile. That is at 272.65. Phil, if we get 2 consecutive closes above that, that would suggest that this rally should continue. We come back to this break. We'll finish taking a look at McDonald's. Of course, I'd like to take a look at anything else that you'd like as well. 877-927-6648 or Steve at TFNN.com. Be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Tigers, the inaugural session of Live Trading Fridays with Larry Pesavento was a massive success. Trades were communicated, questions were answered, and money was made. Every second and fourth Friday of the month, from 9 a.m. to noon Eastern Time, Larry wants you to join him as he places live trades and takes your questions. That's right, with this monthly subscription, you receive access to 2 live trading events. We are gearing up for the next session Friday, April 26th, so there's still time to sign up. For this month only, use code LarryLive at checkout in order to secure $50 off your monthly subscription price for as long as you subscribe to the service. We'll see you next Friday, April 26th, Tigers. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Let's get back to McDonald's here. So let's open up the daily time frame chart. Daily time frame chart shows really a couple different patterns. I can see a couple different A to B equals CD patterns to the downside. You get that three-river Morningstar candle formation. That's what formed out here, Phil, on the trading session of April 18th out there. And then you have price simply moving higher. And today's move above the top of that profile. So you've got a Rhodes Momentum Indicator bottom, and today you're getting a profile change in trend signal. So now we got the change in trend, and that suggests that we should head higher out there. When I take a look at the daily time frame, my next higher area where price would head to would likely be its swing point. That's either the swing point from March 28th or the swing point from March 21st. But the bottom of that March 21st swing point gets you right into that swing for March 28th. So that would become a price target. By the way, that price target out there right now, I would say on a daily time frame is between 281.25 and 283.38 out there. Now let's go take a look at the weekly time frame chart. On the weekly time frame chart, I don't know that this is I don't see a bottom pattern per se out here, but we do have price that is back inside its weekly profile. So if you were to ask me, where's the next resistance point? That next resistance point is at the top. It is. So the bottom of this profile, doesn't happen often. The bottom of the profile of 268.47 is both the bottom and the center. So that should be on a pullback. That should be a strong level of support. If McDonald's, Phil, were to close below 268.47 on a weekly time frame, odds favor not only do we get back to test the recent lows, but we get back to the 254.60 level. So that's something to watch. But what's more important to watch right now, because prices rally, we're trading above last Friday's high out there, is to watch the 275.18 area. If McDonald's can clear that, can close above that, certainly on a weekly basis, but intraday, if it can close above that, that's a pretty decent signal that it may in fact do that. Then what you'd be looking at is a move up to 280.90. So I'd give you the swing point on the daily time frame for March 28th. That's in the 280 area. That jives with what we just took a look at. What we took a look at on the weekly time frame chart. But the key to that is going to be price being able to get above those sellers that reside at 275.18. The monthly time frame chart for McDonald's, I don't see anything out here to really assist you and I with regard to that information. Now, today is going to be bar number 4 to the upside, or likely to be bar number 4 consecutive moves to the upside. So let's pull over our consecutive chart out here and see what this is communicating to us, if anything. We haven't seen 4 consecutive days the upside for quite some time inside of McDonald's. So what I would suggest, if we take a look at the last bull run that we had out here, the last bull run in McDonald's formed back in October of 2023 when the markets did. And this got up to 5 consecutive days. Then I see another 4 and 4. So what McDonald's is telling you, Phil, is to expect or anticipate some type of pullback or retracement, likely to start tomorrow, but perhaps on a Wednesday. And then what you'd be watching to the downside is you'd be watching the top of that profile at the 272.65 level. So I hope that helps you out with regard to what's going on with Mickey D's out there. Let's go out to Niagara Falls and speak with Michael. Michael, thanks so much for calling. Thanks for holding. How are you today?
Okay. Could you look at NVIDIA? It suffered a 10% drop on Friday. I mean, it was just someone pressed B for bottom on the elevator, and it just took the ride all the way down to about 3:45 p.m. on Friday where it bottomed. And I was just wondering if it's going to take the escalator up to a certain resistance level. Could you look at the charts?
Yeah. So the reason why it stopped where it did, I would offer to you, is the bottom of its weekly profile is printed at 755.94. The low of the day was 756.06 out there. So you've got profile support. So the reason to bring that to
profile, you're saying the task market profile generated the bottom in advance.
Well, what it did, you use the word bottom, I will use the word support. because I don't have a bottom pattern, but coming back to support can be a bottom. But if anyone was wondering, why is it that NVIDIA stopped where it did, you and I can take a look at the weekly time frame chart and say, we know where the buyers were lined up. Now, these profiles, folks, you don't necessarily use them right to the T. Sometimes they do work like that, but you're using it as a range and a slight guideline out here. But if price were to close below 755.94, and Michael, I'm not saying 755.93. I don't know what I'm saying. I just know it's not 755.93. Then that could open up the door over time for a move back to 473.20. That's its last breakout level. And that's what the weekly chart is telling us. You were asking about, is there a possibility of a rally from here, and where would resistance be? So if, in fact, we were to see a rally inside of NVIDIA, the resistance points would be about 873.52. The daily oscillator and change line right now is at 868. But if price is going to rally, and I don't know if it will or it won't right now, we'll look at some intraday charts as well. If price were to rally, that green oscillator and change line is going to rise up there, and then we get to the bottom of the profile. So we know resistance is 873.52, and key support is 755.94. Now, the monthly time frame chart, just to take a look at its message, and we have some days left, obviously, before the month ends out there. But right now, you have a bear sash candle, and that would confirm on a monthly basis a Rhodes Momentum Indicator top. So that means, Michael, watching that 755.94 level is really going to be key, because if price does close below that, then where price would target would be that monthly oscillator and change line, and that's at the 627 area. Now, before I switch and take a look at any intraday charts for you, what questions does any of that review pose to you? And in the daily time frame, what Friday's session did was it generated an A to B equals CD pattern to the downside. It did it with volume. Now I'm going to try on my charts out here to draw that in. But any questions so far about what I've been able to share with you? Do we have Michael?
You see it in a tight trading range, like a 100-point trading range, forming like a rectangular box range. Like you've got a low and a high, something like that, like a lower. Like if you notice, it was trapped between 840 and 907, and then it snapped 840, and it went down into a lower range. You see, so maybe the snapback rally causes a lower high, and they chop around into a rectangular box.
It's possible. I can see that as a possible pattern because of this gap to the upside back on February 22nd with about 86 million shares. And on Friday, price was pulling back with 87 million shares. So that's a possibility. But the pattern out there, if this is going to be any kind of a bottom, what we would see is we would need a bullish reversal candle to confirm that. There's a to B equals CD pattern. Price made that price objective out there, but that doesn't mean that it has bottomed. And the lower target on the not the A to B equals CD pattern, but where price broke out from on a daily time frame was 616.50. Now, let me pull over just an intraday chart just to see what's going on. I've got a 65-minute chart up out here, and right now, what this is signaling to you and I, Michael, is this has a TD9 count bottom pattern, and price is trading with inside its profile. And resistance out here is the top of that profile. That's at 784.74. So we're going to a break right now. If you want to hold on through that break, we'll come back. We'll look at the 65-minute chart for NVIDIA with Michael in Niagara Falls.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back up, folks. We're taking a look at NVIDIA. We've got the 65-minute time frame up on our chart. The reason we have 65 minutes is because it divides equally into a 6.5-hour day out there. So all our candles are really representing the same thing. So, Michael, the last 65-minute bar just completed just as we were going into that segment out there. And so the key level here, at least from an intraday's perspective with regard to NVIDIA, because it's got that bottom pattern, is to watch the 784.74 level, which is basically where we're trading right now. If price were to close above...
We pierced that level temporarily, so we're just hovering near that level.
Yeah. So resistance is still there. You really got to clear it, you know. And so, but if it does clear it, and you got to have 2 consecutive bars above that. But if you did clear it, what this time frame, what this intraday time frame would be signaling to you is that NVIDIA should rally up to the 851.66 level. So that's on a 65-minute time frame. And you know, when you get to a potential bottom, like we took a look at the weekly chart hitting profile support, if there is going to be a bottom that's going to form, you're going to see it on the intraday chart. So let me throw up the 30-minute chart and see what is out here. And on the 30-minute time frame, I see an A to B equals CD pattern to the downside. That's been confirmed out here. So what the 30-minute chart is telling you, Michael, is that price should rally up towards 802.48. And 802.48 is the top of its profile. Now, I don't remember what the 65-minute suggested a rally to, but this would be what the 30-minute chart would be telling us. And then lastly, just let me put up a 130-minute time frame chart out here. If we get bottoming signals on all 3 of those intraday, and you got a TD9 count bottom on the 130-minute chart. So this is really suggesting that we should see a bit of at least a counter trend move out there. The daily, though, still needs a bullish reversal candle to confirm a bottom out there. So that's my review. What say you, and what additional questions do you have?
So 873.52 is the TD. It's a task market profile resistance. Is that what you're saying on the daily?
No, on the yes, that is exactly correct. Yes, I did say that.
Okay. Thank you very much, sir.
Hey, you bet. Nice to speak to you. That was Michael in Niagara Falls. What a great place that is, folks. Hopefully you've had the chance to see that wonder of the world out there. So we've got a request out here from, let me see, Take a look at wheat futures, and if you have time, Riot. So yeah, let's do both of those out here. So that is for G-Man inside the Tiger's Den. So G-Man wants to take a look at wheat futures. Now he didn't say which contract out there, but the July contract, I believe, is the active contract out here. But here's what I can share with you, G-Man, is you got a beautiful TD9 count bottom setting up on the monthly time frame out here. All the price needs to do is close below, and it's a likely outcome, close below 645.75 at the end of the month out here. So that you're going to get a monthly TD9 count bottom pattern out there. On the weekly time frame, you already have a TD9 count bottom. And here, prices trade above resistance, which is 580. So the intermediate term time frame chart, the weekly time frame chart, is signaling to you and I that price should make a run towards 646.25. 646.25 is where price broke down from. The daily time frame looks like it's trying to generate an A to B equals CD pattern on the upside. Now, this formed a Rhodes Momentum Indicator bottom. So you've got bottom signals for all three of those time frames out there. I would say that wheat has bottomed. Now, if we move this A to B equals CD, let's see if I get this to work here. Oh, perfect. Okay. So now where we're at, if you take a look at this, and I've maintained that exact same angle out there, G-Man, you can see how price is along the left-hand side of that C to D leg. So this says to you and I, and we're coming into that D point potentially with a wide-ranging bar, this is telling you and I that this should do more than a 1-to-1 A to B equals CD to the upside on the daily time frame. So I'd say this. I would say the first resistance level, or the next resistance level for wheat, should be up around 614.50. That's its daily TD9 count breakdown level. If we can take that out, then the next area where price would travel to would be 646.25. If price can take that out, its next battle would be at 705.28. But wheat looks really good out there when you take a look at the daily, the weekly, and the monthly time frame charts. So, G-Man, I hope that helped you out with regard to that. Let's take a look at Riot out here, RIOT, and see what it is doing. Sorry about that. Just trying to let this here populate while I was looking at something else. So if you give me a moment here, not that you need to, but you have to. So we're just getting Riot here to populate. So when I take a look at Riot, what I have here is I have a TD sequential signal, bar number 13, that formed out here on April the 15th. And now we can see that we're certainly going to close above the bar 4 bars prior out here. So, and we're trading above the top of its profile. And in fact, you actually got that confirmation of a TD sequential bottom on Friday out there. And what Friday also did, G-Man, was it closed above the top of its bearish structured daily profile. So that suggests to move higher. Now, on the daily time frame chart, the next upside price target should be $12.28. $12.28 is its daily TD9 count breakdown level. The weekly time frame chart, which formed a nice big old hammer candle last week at its breakout level at 898. Now, when you get back to a breakout level, that can be a bottom. I don't have a pattern. In other words, I can't draw an A to B equals CD pattern on the weekly. That was only bar number 7 out there. That's not going to be a TD9 type bottom out there. But with price getting back to support, like I'd mentioned to Michael, on a weekly chart, we saw NVIDIA get back to support. That can be a bottom. If it is going to be a bottom, or at least some type of bottom for a little while out there, and a little while might just be 2 days, quite frankly. You see those bottom signals on those intraday time periods, which when we took a look at those intraday charts, that's what they showed. Here, price on the weekly basis getting back and forming a hammer candle at 898. I'm going to go with that's a bottom pattern. That goes along with the daily time frame chart. And now if we take a look, and what that tells us, G-Man, is price should rally up towards 1160. So we've got price targets of 1160-ish. That's its oscillator and change line. And if price rallies, that number's going to go up. So 1160-ish to 1228 is a likely upside price target. Now, what you'd really like to see the monthly time frame chart do is get above that red oscillator and change line. So in order to do that, it's got to get up to 1123. And as it's doing that, then it's going to be dealing with the weekly oscillator and change line area. So that's where you're going to have your bumps in the road, so to speak. If I look at what's going on from an intraday perspective for Riot, R-I-O-T out here, what do we have? Nothing on the 30-minute time frame chart. Yeah, nothing that I see out there to assist us. Let's look at a 65-minute time frame chart. Got a Rhodes momentum indicator bottom. I don't have any kind of a top. This is looking to me like it wants to continue to rally out there. So Riot looks pretty good. So it looks like it wants to further rally. G-Man, I hope that provided you with the information you were looking for, or at least where the next battles are going to be. So thank you very much for that request. Nicholas wrote in, and Nicholas wanted to take a look at two things. One, he wanted to take a look at Mara, M-A-R-A. So we're going to pull that chart up there. And he was also wondering, inside of Thinkorswim, what the tool is called that generates those TD9 counts out there. And I was hoping Mr. Bill would be able to, did he write it in? Well, not yet. So I don't know the answer to that. It might be something like sequential or something like that, Nicholas. If somebody types it in the den, maybe somebody knows. Yeah, that was okay. Yeah, so but look through those tools. Sequence counter. Thank you, Mr. Bill. I knew he would know. So, Nicholas, it's called Sequence Counter inside the Thinkorswim application out there. And when we get back to this break, we'll go ahead and take a look at Mara, M-A-R-A, for you as well. Be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're taking a look at ticker symbol MARA. This is for Nicholas, and this is Marathon Digital Holdings, which on Friday closed above the top of its daily profile, as well as that red oscillator and change line. And that generates a profile change in trend signal. Now, we need to see 2 consecutive closes above that level being $15.49. But the other level really, Nicholas, that in order for Mara to suggest that there might be a bottom here, this would just be a profile change in bottom signal. I don't really see a completed A to B equals CD pattern out there. You really want to see price stay above that red oscillator and change line at 15.89. If it can do that, then that's signaling to you and I that price might rally up to 20.57. If we look at, the reason I say might is because we're trading below the weekly profile, and the weekly profile is at 17.10. So if price can close above 15.89 today, then what I would say, it could be setting up a move up to that 17.10 level. And if price can overcome 17.10, then we'll get up to 20.57 out there. So that's what I see when I take a look at Mara. Dan wanted to take a look at GLD. If we take a look at GLD, which is gap down, obviously, with gold trading down $64 as we speak right now. This has a sell the D point top. As far as support out here, it's at 207.55 to 211.32. But we really want to go take a look at the gold chart. So I'm going to pull up the gold charts out there, Dan, and we'll take a look at what we have here. The daily time frame shows right now that you have a sell the D point pattern. That's forming today with this little bear sash candle out there. Friday negated a prior sell the D point pattern, and price is trading into its buy zone. And the buy zone, which also its breakout level, 23.21, is also in there. The buy zone is between 23.1870 and 23.51. Now, a time frame chart for you to watch, I would say, would be the 2-hour time frame. Why is that, Steve-O? Because a 2-hour time frame chart, as we get off the air, is going to go ahead and confirm a TD 9-count bottom pattern. Now, that says to us, Dan, that the pattern will complete at 2 p.m. And what should transpire? And that we can still get lower lows out there, folks. The pattern will complete at 2 p.m. What should transpire from there? This price should rally up towards that oscillator and change line, currently printed at 23.75. So, folks, have a marvelous and magnificent Monday out there. Thanks so much for joining us here. I'll look forward to speaking to you again. Have a marvelous Monday. Be safe out there. Take care.